Hi everybody, this is Property with Leonard and welcome to another episode. On this channel we discuss property, finance and investments. Now please note that none of my videos constitutes as financial advice. If you are looking for financial advice, please speak to an accredited and registered financial advisor. Now on today's topic we will be discussing, I'll be sharing with you the true cost of buying a home in South Africa. It will help you and enable you to budget accordingly. You know, when you look at a house and the price is, for instance, on the market for R1,000,000 and you put in an offer to purchase, that R1,000,000 is not the only cost. Obviously, the house still needs to be transferred into your name, the bond needs to be registered if you are applying for a home loan, etc. So what I will be doing with you today, I've got a list here in front of me that I'm going to go through and just share with you guys in general. It's not limited to these costs, but it should give you a very good guideline on how much you should budget for. So before we get to today's episode, please guys remember to subscribe to my channel, like this video, share it and leave your comments in the comments section below. It's very good for you to like and share it and comment. It's good for the YouTube algorithms, and that way we will grow and we will reach more people who me and you know can benefit from the contents of these videos. So the very first thing that you need to budget for or need to be aware of when it comes to these, let's say, hidden costs or additional costs in buying a home here in South Africa is the first thing is it's a deposit. You know, many a times, and I've discussed this at length, that buying a home should never be an impulsive buy. You should really budget and plan for it. My advice to you guys was that you start this whole process at least 12 months before the time. And I've discussed this at length. If you click on the pop-up banner, it will take you to my previous episode, and you can please, I will encourage you guys to go watch it. And that will give you a clear indication and a better overview of what I am referring to and talking about. So this deposit, let's use the R1,000,000 as an example. Many a times when you apply for a bond, the bank might require that you put down a deposit. They will say, we'll give you the bond subject to, we'll give you 90% of the bond, so you need to give or contribute 10% of the R1,000,000, which is 100,000 Rand. Sometimes a bank require up to 20, even 30% of the purchase price. So you need to budget for that. It will bring down your bond repayments, because the amount that you acquire from the bank, the amount that you loan from the bank will be obviously much less. And when you have a deposit, it is always advisable, because the bank will more favorably look at your application and you will be in a better position to negotiate a better interest rate. And as we discussed before, a lower interest rate can really save you thousands, hundreds of thousands of rands, depending on your initial home loan over a 20, 30-year period. So that is really my advice to you guys. When you put down a 10% deposit, that is normally kept in by the attorneys or by the estate agent, doesn't really matter, in an interest-bearing trust account. So at the end, when the house registers into the new owner's name, that money will be paid either to the bank if it's a bond, or to the owner, the seller, if it was a cash deal. But the interest that accrued over that period of time will be paid back to you as the purchaser. The second cost that you need to consider and maybe budget for is the deeds office registry fee. Now this is the fee charge that the deeds office charge for the legal registration of the mortgage bond, and this is an amount calculated at the value of the home loan. It's a set fee. For example, a home loan of 150,000 Rand and less, your fee there will be around about just over 300 Rand. And if your home loan is, let's argument's sake, this is not exact figures, so please don't hold me to it. It is just to give you guys some sort of indication. If the home loan is around about R1,000,000 Rand, that fee would be around about 1,000 Rand. So that is the deeds office registry fee. Next up is the transfer duty. Now, the transfer duty is the government tax that you need to pay. And this is to transfer the home from the seller's name into the new owner, the buyer's name. If the seller is a VAT vendor, there is no transfer duty, but VAT that needs to be paid. The next one is the conveyancer's fee to transfer the property. Now this fee is set, it is regulated by the Law Society. The next one is Sundries and Postages or Petties for transfer of the property. This is the small fees that the transferring attorneys charge to cover small things like telephone calls, printing and postages and deeds office, etc. When they contact you or communicate with you, it's that small fee that they charge for that. The next one is the initial home loan charges, and here I want to just clear with you guys, it is the home loan initiation fee, and what that basically is what the bank charges to process your home loan application. And then there's also some ongoing home loan charges, and by that I mean what you have to pay on a monthly basis as included in your monthly installment. And that is an administration fee. That is what the bank charges to administer your home loan account, and you can expect to pay anything, say around about, once again, ballpark figure just as a guideline, around about 100 Rand, but that is a monthly fee. It's ongoing, depending on whether you have taken out the bank's in-house homeowners insurance. And talking about the homeowners insurance, the bank will insist that you take out homeowners insurance, and that is to insure the building, the physical structure, and you insure it against natural disasters, fires, storm damage, etc. For as long as you have the mortgage bond, the home loan with the bank, that is compulsory, because obviously if anything should happen, you can claim, and the bank also has vested interest in the property. That's where the money is. So it is compulsory. They wouldn't grant you a home loan if you don't have this homeowner's insurance. And the next one is your home loan protection insurance. And this again, if you don't already have something like a life insurance that you can seed against this, the bank will require you to have this home loan protection insurance, and it will protect you against retrenchment, against disability, and against death. Meaning that if, and God forbids, if somebody should die, then the home loan would be settled. It will be obviously take a lot of strain of the remaining party to the initial agreement, but that's basically what it is. And then there's other initial cost for buying a property, your municipal provision for rates and taxes. There's a couple of once-off costs that you also need to consider, which is moving costs. There's telephone and internet reconnection charges. Many a times you also have your alarm monitoring, and that's basically what all these additional costs entail. There might be more, so I'm just giving you guys some sort of guideline to give you an idea, and I really hope that you've picked up a couple of things that you didn't know before, and that you can plan and budget accordingly. Thank you so much once again, everybody, for joining me on today's episode. Please remember to subscribe to my channel, like this video, share it, and leave your comments in the comment section below. And I will see you soon. Bye for now.